Want to talk about the stock market today? What's going on with the stock market today? We're seeing a great deal of buying. I guess there's a deal in the works right now with Great Britain, which I got to be honest with you is just silly beyond belief. There should never have been a reason for the deals in the first place. Regardless, the stock market is taking this in stride and is rallying. These tariffs have one purpose: to raise revenue so that tax cuts can get pushed through. The federal government is also slashing the budget as much as they can so that there isn't as much of a deficit. And that's a key factor right there. While we may see deals where tariffs are removed, there's still consequences overall. First off, there's something like 175 countries that have these tariffs placed against them. So one down, 174 to go. The numbers are irrelevant, actually. More importantly, what will be the damage going on with the economy during this period of time? Now, there's a key economic indicator that I really want to point out. Back in January, prior to everything sort of happening, Walmart had reported its earnings and was less than awesome. We'll just say that. There was a ripple effect that began at that point when Walmart's stock started selling off. They basically said the consumer is stretched too far. This is an interesting point because up until then, what had happened was there was a massive rush of economic activity in preparation for Trump and its tariffs. Massive. We have seen nearly double the amount of imports come into this country getting ready. During that period of time, with that economic activity, we also had a 4% unemployment rate. And we've seen the GDP growing as much as it did. And yet, Walmart came back and said, wow, the consumer, they're tapped. During that period of time, think that through for a second. A lot of people seem to be missing that one aspect because at this point, that huge shift of, wow, we really need to kick it up and get ready, that's gone. So what kind of economic activity are we going to have after that? The tariffs themselves, we're seeing a huge drop off of some 35% minimum in certain ports. The port authorities out of Los Angeles are reporting this. So we had Walmart report their number, I think it was like a Thursday. The very next day, University of Michigan sentiment came out and just nailed it, basically saying the consumer feels no love whatsoever. Since then, that particular number has deteriorated worse and worse. It's at an tied with all-time low at this point. Now, next week, we get Walmart again, and the very next day, University of Michigan consumer sentiment. What I wanted to do in this video is break down the relationship of how the consumer feels and what that means for consumption, which is a big part of the overall U.S. economy. Let's jump in and we'll take a look at some charts. Wherever you may be finding this video, if you're on my Substack, thanks so much. Make certain to subscribe. You can keep up to date with my videos. The way I have it broken down is your video is at the very top. And then for those paid subscribers, what I do is I break down how I'm making my trades within the market. Now, I try to describe what's going on with the economy and how that affects the stock market broadly speaking. So if that's the kind of content you're looking for, make certain to follow along, subscribe. Also, YouTube, if you're finding me on that channel, make certain to find the links down below so you can sign up for that Substack newsletter. Otherwise, thanks so much for the like and follow and the comments. They certainly help the video. And that's what I do. Is I am an economist. I'm a former hedge fund manager, and I break down economic indicators. These economic indicators have a very good job of telling you what's happening in the economy. The stock market is a reaction to that. It is the biggest discounter of information. Mostly the stock market, the responsibility of the stock market is to take all information and discount it, and from that, stocks move. So understanding which direction the economy is going, of course, is one of the most key factors you can do. Um, Now here's a look at, this is SPY ETF. Since I sat down to record this video, of course, a deal that has been announced many hours ago is for some reason lifting the stock market. I knew this was happening, so now all of a sudden we're seeing a big rally in the stock market, and it could very well keep going for the day. Awesome, because just yesterday when they announced this with Great Britain, I bought a 1 DTE call, and it's certainly in the money at this point. And if it continues to move so throughout the rest of the day, maybe I'll go grab a beer. In the meantime, this is a look at what's happening with the stock market. Now, I went back to 2022. You may recall we were getting inflation, and the Federal Reserve through 21 into 22, and the Federal Reserve began ratcheting up interest rates continuously because of price pressures moving higher and higher. I believe it was October, and I think, well, yeah, looking at this chart, that's roughly October. The Federal Reserve began to shift, saying, we think we're there. And because of that, that was the immediate moment that the stock market just basically took off. And as you can see, and I think in that particular period from 2021, we saw the collapse of from COVID, then the rally, then the inflation with interest rates that moved back down lower. I'm pretty sure October was the sort of nadir bottom of that move. Since then, of course, well, we were on a roll. Take a look at this particular arrow right here. This is January to present. I took basically January 1st, right around that period of time. That particular area is when things got a little haywire. That's when Walmart released their earnings. That was also, if you go back, SPY and QQQ both had all-time highs. One was the 18th, one was the 19th, and then it was all downhill from there. Then, of course, April right there, the big moves downward because the tariffs, which have been paused mostly, we got a big slew of tariffs, but there was supposed to be a lot more. I don't think they happen. What I do think is going to happen at this point is we will see backing away, which we're continuously seeing backing away. He realizes all of a sudden, yeah, there are actually consequences. And Mr. Market does not care about his mantras or anything like that. We're going to make so much money. It might be the billionaires that are going to make so much money because you're giving them tax cuts. But the basic economy has to carry that. Mr. Market lives in reality, and you can see what that reality is, a massive sell-off of 22% from the very top to the very bottom in that move, but we're recovering a lot of it. I still think that they are, despite the fact that they're backing away from everything, I believe they still will keep tariffs imposed on some level across the board. They are raising revenue so that they don't make a massive hole because of the tax cuts. Now, I've done some videos on a bunch of the since Reagan and how effectively on a GDP basis, the budget has remained fairly flatline on a percentage basis versus GDP, and it's roughly about 6%. And it's been pretty flat across the board for all of the economy since Reagan. But if you've seen pictures of the debt, it's just spiked to the moon. What was the one factor? Tax cuts, tax cuts, tax cuts. Effectively, the United States of America is bringing in less taxes, but they continue to spend the exact same percentage. So on a percentage basis, the deficit per GDP continues to spike higher, notwithstanding Clinton, of course, but he cheated. He had a really good economy, which he basically egged on a little bit. Greenspan certainly helped certain things with interest rate policies and things of that nature, but effectively it was the dot-com era, and there was just this massive investment in the United States. He didn't really do a whole lot, and yet all he had to do was ride a surfboard, and he did pretty well. Outside of that, we've had to finance two major wars. We've had three economic events, not exactly awesome events. We had the dot-com bust, we had the financial crisis, and then we had COVID. These also pushed the debt much higher. But it's really this one factor. And I don't really care about anyone's individual politics on this. The United States government has a budget. It is a certain percentage of the GDP. What has shifted and pushed the debt up higher is the amount, the quantity on a percentage basis of the tax take. If you're going to lower taxes, if you don't want to spike up the debt, you need to lower the budget. They don't do that. And in this case, we're looking at a government who wants to raise the budget. They have to pay for it somehow. They're not that stupid. And so the one mechanism is, well, we'll just put tariffs across the board. We'll raise so much money, we'll be rich. The consequences were there. Now we look at Walmart. That arrow that I had on that SPY ETF is right there with the big drop downward in Walmart. The very next day, we got University of Michigan consumer sentiment. So you see the relationship of, going back to what I said in the intro, the economy was doing very well, forcefully, in preparation of Trump and his tariffs and his economic policies and the debt, deficit, all those things. All these companies, I've seen video after video after video of small businesses saying, yeah, my spare bedroom filled to the max. I bought everything I could for the next year to get ready so I wouldn't have to pay these tariffs. Now that particular individual will no longer be buying anything for the next year because of the big breakup, shakeup in the economy throughout 2025. You also have to kind of consider the world economy, the reaction that we're not going to get out of China. One of the reasons why I like shorting oil prices at this point, and I've done pretty well over the past couple of days, China's going to really take it because of this. They're simply, all those producers are simply not producing. They're certainly not shipping. They've seen big drop-offs, and we're going to see this continually play out. So you see Walmart, they basically said, despite the fact that the economy was roaring at that point, getting ready, pushing through double the amount of products through the system, we don't see the consumer really surviving this year, in the sense that revenues are likely to decline. The consumer is tapped out. Our biggest segment of growth is families making over $100,000, six figures. And you see the reaction in the stock market from there. And here is University of Michigan sentiment. Now I don't have, this goes all the way back to 1980. The data points back there, you can see how we are, you can see where COVID hit, and it just continually went lower and lower. That lower and lower is, of course, all of the inflation that was caused because of the supply chain breakdown, as well as the inflation jump from that. And I explained 2021, we started getting inflation spiking all the way up in 2022 to the point where back in October 2022 through 2023, that's when the stock market took off, but interest rates were likely still kind of hanging in there. So kind of keep that in perspective when you're looking at this chart. And just for the record, if you're looking at this chart, the way that the dates are, it's the center of that date, January 2020 specifically, is the center point of that. That's how that lines up. It's just the way Apple does their Apple numbers. Actually sucks, but Now, moving forward, we are going to see price pressures, obviously. We are seeing a big shakeup in the supply chain. We will not see trucks moving through the nation. That will create unemployment. We are seeing headline after headline of the tariffs, the consequences, and things like this. And you can see why the consumer is as not so happy as they are, given we're probably the first country in the history of the world to self impose sanctions against ourselves effectively. How does this play out with the economy? Consumption. Now I look at things on a year over year basis. If you're looking at the money supply, and the money supply is growing at a higher and higher rate year over year, that means money is pouring in, banks are lending out, businesses are borrowing, and then hiring. And mostly speaking, you can see that play out in consumer sentiment. When sentiment increases, effectively it means that consumers feel as if their current prospects and future prospects are wherever that particular number is. If you see an increasing number, then that's where consumers feel they are. You can see the immediate reaction by consumers on how they feel and the close relationship between consumer expenditures and consumer sentiment. Consumer sentiment is incredibly low right now. We will see what happens with the tariffs. It's a day-to-day basis, actually. Regardless, we are going to see unemployment. This will trickle through the entire economy. We are seeing the consumer basically not spending money because they're fearful of the future. So we go back to, what is Walmart going to tell us? And you break this down looking at this in this fashion, and you can see that more likely than not, next week's Walmart numbers, which is a pretty good gauge of how the consumer is in any particular point, likely that's going to be an ugly number. But gee, there's deals. Okay, Great Britain. How many other countries you got? And then the very next day, right after Walmart, again, we get University of Michigan consumer sentiment. And I expect that the numbers are going to be not awesome. I'll lean towards there. Because of that, I could see both Walmart stock selling off if they give us information that is beyond what we initially discounted inside the economy and stock market. But there's deals. So you see how there's this balancing act. The stock market is going to sit there and say, well, we feel like there's deals that erases all this. But if Walmart comes up and says, yeah, you didn't discount this number, that's new information. And the stock market is the greatest discounter of information there is. So we could see a big number come through that towards the negative side that pulls Walmart stock. It'll pull Target stock, Amazon for shipping, likely UPS, FedEx, oil companies, because the reality is that there's going to be less economic activity within the economy. You continue to see how this ripples through. So next week's numbers are highly important, but there's deals. Okay, great. One deal. There should be one deal. Yeah, it's not working. I'm going to go ahead and cut this. Great. The stock market would rally. Then we turn to, okay, exactly what are you cutting and how steep are these tax cuts and what would that do to the deficit? So even though we might get deals, we would see the stock market rally to some extent, and maybe they back off everything, which would be the best case scenario. But if they sit there and continue to lower tax take while increasing the budget, interest rates, forget about it. And that's how I kind of am looking at things, wondering what is next. He walked in with the concept of there are zero consequences in life. Look at me. So when they said, let's give tax cuts to anybody making anything outside of the ordinary because you deserve it. Your life isn't quite as awesome as it could be. We'll just raise tariffs across the board. That's revenue. There won't be any consequences. Mr. Market said, yeah, we think not. They had to back off. There was a massive pause till mid-July, July 9th, I think is the date. I don't think those go into place. I believe that there is some walk back and then some kind of deals are being made. But it's possible that all these tariffs go away because some judge sits there and says, you never had the ability to do this in the first place. If you want to raise taxes, that goes through the House of Representatives as the Constitution dictates. Eventually, these tariffs just go away no matter what. But the tax cuts don't. And that's where I'm looking at things saying, okay, long-term perspective, I do see interest rates remaining elevated, and that's where I am with this overall. But we still have to deal with all the, hey, there's a deal, stock market rallies. Okay, we've finally put together a budget. Ooh, it's a doozy. So we need to see how that plays out. The Republican Party wants to get this budget done before Memorial Day weekend, which is only like 2 weeks away. So stay tuned. Things could get interesting really, really fast. Again, thanks so much for following along. Make certain to hit the subscribe, follow button, wherever it is you're finding me on the internet. Thanks so much. We'll see you in the next video.